And of course, the UK has been a standout underperformer really for the last several years. Now, part of that reflected a build-up in the risk premium around and post-Brexit, but a lot of it really reflected this growth value split that was so dominant in the markets over the last decade or so. And the UK very much sits in the value camp. It's got big overweight positions in energy and resources and banks. And these are areas which have been serial underperformers until very recently. Interestingly, in the last week or so, as the perceptions about the Fed's timing of liftoff have shifted, the UK has actually outperformed as you started to see more focus on these laggard value areas. Now, you're right to say, of course, that consumers which have high savings in the UK and have been supporting UK consumption will be hit as a result of higher energy costs. Of course, that's true in other countries as well. But I think the real dominant drivers of the UK market are going to be whether these laggard value parts of the equity complex in general really do continue to recover this year. And we think they will. Bear in mind that a lot of these value spaces, like the energy stocks, have got double-digit free cash flow yields. And the UK market is trading at around a 40% discount to the US, pretty much a record. And it's got amongst the highest free cash flow yields and dividend yields in the world. So it's very much on that deep value end of the spectrum. As long as the fundamentals are improving for those sectors and the economy continues to grow, notwithstanding higher rates, then I think it's got a chance of recovering, quite nicely through the course of this year. We're not expecting massive outperformance, but I do think we'll see continued reasonable returns in the UK market.
That's good to hear. I mean, some outperformance. Certainly there was a good IPO pipeline in 2021, but compared to US, it's been massive underperformance. And do you join the camp then that the FTSE 100 is in something of an existential crisis? Some saying we just need to nurture more tech, for example, to get those unicorns.
Well, you're absolutely right. If you look at the FTSE 100 itself, and you look at the tech exposure, it's close to zero. Of course, the UK market is made up of various different indices. The FTSE 250 has a lot more technology in it. And the UK economy has a lot of innovative technology, and a lot of it is in the private market at the moment. The question is where eventually these private companies which are growing choose to list. But I think there is a lot of interesting, innovative technology going on in the UK. But of course, as I said, a lot of it is in the private market at the moment rather than in the FTSE 100 index. But the FTSE 100 index is serially underperformed principally because it has been very absent of any technology during a decade in which technology was the supreme winner in terms of returns. And it was also very heavily exposed to all of the sectors that were facing major challenges and headwinds, banks which needed to recapitalize, energy stocks which were suffering from falling commodity prices and so on. So you're right that it has little technology in it. I think that is a structural disadvantage. But there is technology innovation going on in the UK. The question is where that will eventually list, I think, as it becomes public.